Capital in an economy flows into the private and the public sector. The public sector is the central government and its institutions, while the private sector is everything else that is not a government entity. If the private sector is in economic trouble, the public sector will channel funds. Both sections of the economy can become over-indebted over time, which can lead to large economic swings. In 2007, the amount of private debt in the United States reached up to 100% of GDP, and by 2008 the economy went into a recession because the level of private debt was not sustainable. Events where private debt reaches a percentage of GDP that cannot be sustained are not unique and have happened in the past, regardless of whether it is a developing economy or a developed economy. These events happen because of the cycles that credit creates by increasing purchasing power when it is given and reducing it when it is repaid. The private debt cycle starts when a new business cycle begins in a 5 to 8 year period, give or take 1 to 2 years. As to how the public sector, which is the central government, can become over-indebted. Using the United States as an example, the 2008 recession required the government to channel funds into the private sector to avoid a greater economic problem. This led to an increase in public debt from 60% of GDP to 82% by 2009. The government had to borrow funds to allocate resources to prevent many institutions from becoming insolvent. The result was that the amount of public debt in the economy grew to 82% of GDP. Whenever the government funnels large amounts of capital into the economy, it must come from somewhere. Generally, governments borrow funds, which creates a cycle where it increases spending power then decreases spending power when it is repaid. Whenever events like recessions occur, the public sector will provide funds to the private sector. Over time, the debt that the public sector borrows to help the private sector will accumulate. Looking at the historical amount of public debt since the early 2000s, we can see that it increased from the low 60s to 118% by the first quarter of 2023. The large increases in public debt began in the 1980s when the country had to manage an inflationary environment, and then again in 2008 when private debt reached up to 100% of GDP, that was then followed by a recession. In 2020, the sharpest increase in public debt happened because of the many economic policies that were passed to help those affected by the pandemic, in addition to an infrastructure bill and the financial aid that was given to Ukraine because of its conflict with Russia. Note that in 1971 the United States removed its peg from gold, which allowed the currency to flow freely, and with that it also allowed the country to borrow with less restraints. We can see from the graph that the amount of public debt has increased at a faster rate since that time. It is important to note that when the U.S. unpegged from gold, it allowed other countries to borrow large amounts of dollars. This sent Latin America into an inflationary recession in the 1980s known as the Lost Decade, as well as Asia in the 1990s. Unpegging the dollar from gold allowed the country more flexibility in terms of borrowing. At the same time, we can see that when there have been recessionary periods, public debt has increased because of this flexibility for borrowing. Governments can use 3 channels to allocate funds in the economy. These channels' efficiency may vary depending on the economic environment. The first channel is to increase and decrease interest rates. This way the central bank does not have to print money or buy financial assets. This is the tool used under most economic environment. When the first channel does not work, the government will use its second option by printing money and buying financial assets, which is quantitative easing in the United States. Periods like the 2008 financial crisis in the United States required the country to use quantitative easing to bring the recession under manageable control. In the case of the 2020 pandemic, the government bought large amounts of corporate bonds to allocate funds into the private sector. This was not the most appropriate tool to use in that environment because funds were not reaching those who needed it the most. If money does not reach those who need it most, then the government intervenes like in the 2020 pandemic and uses channel number 3. In the United States, the central government allocated funds directly to those in the economy who needed it. This was a direct channel through payroll protection, where the private sector was given funds to keep employees on payroll. Additionally, money was sent to those who did not earn much. The sharp increase of public debt in 2020 can be interpreted as a transfer of wealth. Based on the graphs, we can see how personal savings increased as the government funneled capital to the private sector that did not need to be repaid. This led to an increase in purchasing power for the private sector that will lead aggregate demand to outpace aggregate supply, and therefore prices rose to absorb the high amount of purchasing power. This is what was experienced as inflation and will later transition to stagflation. Stagflation is when inflation remains in the economy for a long period with low productivity. Under normal circumstances, the central bank can control inflation by raising interest rates, but the large amount of capital that the private sector received made the private sector less sensitive to traditional interest rates increase. The result of the large transfer of capital from the public sector to the private sector was that the private sector became better off economically while the public sector became over-indebted. To complicate matters more, the central bank bought large amounts of corporate bonds to provide capital to the private sector. As interest rates quickly rose, the central government suffered losses from those bonds because of the inverse relationship between present value and interest rates. Therefore, as interest rates increased, the value of the corporate bonds the government bought decreased, which leads to a deficit. As the private sector purchasing power increased because of the economic help received, there was a drop in lending, which can be noticed based on the graph. This led to a decrease in household debt. As for banks, when demand for loans decreased, their holding of government securities increased because of the large amounts of deposits received from those who received government aid. Since bank deposits are a liability and they must pay interest on them, banks needed to lend. As the need for lending dried up, banks bought large amounts of government bonds to earn income to service those deposits. Then, as interest rates quickly rose to bring inflation down, those government securities' present value decreased, which led to the failure of some banking institutions because their assets could not cover their liabilities and there was not enough time to diversify their loans portfolio because the need for lending decreased. Note that similar economic policies were adopted across the globe during the pandemic. The result is that the public sector of many economies has become over-indebted, which means that they have large deficits. Although the private sector is well off, the public sector has a deficit which needs to be serviced. For governments to service this debt, they need to do a combination of increase in taxes and money printing. Note that because interest rates are high, it means that governments must pay higher interest payment on their bonds outstanding. This of course means that their debt outstanding is increasing. Governments can also choose to print money, which may accelerate inflation and devalue the currency. This type of economic policy has led to unwanted consequences in the past for different economies.